Good afternoon. Well, the Aussie share market showed its resilience today, rising for the fourth straight day, shaking off those negative leads after Wall Street and European markets closed lower on reports that China didn't want to pop that champagne bottle to celebrate the trade deal just yet and wanted yet another round of talks before inking phase one of the US-China trade deal. All in all, the XJO, or the ASX Top 200 Benchmark Index, had a positive day, finishing with a profit of about 0.1%, with a broader market having now clawed back most of those October falls. And that takes us to sit about 2.8% away from the all-time high that we hit in July. The healthcare sector shone the most today, leading the charge, up about 1.4% after CSL and Fisher Paykel both closed at all-time highs. Utilities, industrials, tech sector and the property sectors all followed. Materials or miners were down the most today, finishing with a loss of about 1%. But the RBA noted in its meeting minutes today that the iron ore price has been volatile of late, but supply concerns now seem to have somewhat eased, and that Chinese steel demand is still strong, and that supports the sector on the longer term. The materials sector, also looking longer term, is up about 15% year to date. In terms of key standout stocks today across the market, as we mentioned earlier, Fisher & Paykel, their shares hit a new all-time high today. In fact, for the second day in a row, after being upgraded by 3 brokers today. Yesterday, the product manufacturer was upgraded the company upgraded their earnings guidance. In fact, their earnings guidance was bumped up for the second time since the start of August, following the successful launch of their face mask in the US. Fisher & Paykel now expects net profit to grow by 4% and revenue to tick up by 2% to 1.2 billion New Zealand dollars, and that's for this financial year. UBS raised their target price for Fisher & Paykel by 8%. Macquarie rose their target price for the healthcare company by 11%, setting a price target of $18.38. And today it closed over 2% higher to $17.48. Also in the healthcare space, CSL shares, they hit another all-time high for the third day in a row, closing at $248.39, with Citi saying there's still more upside to come, and Citi's targeting a price of $252.80. Goldman Sachs also is bullish on the stock as well, noting it's a buy. Yesterday, in fact, Morningstar, an independent analyst, issued a research paper on the stock, noting a solid outlook for CSL, and that Morningstar expects CSL to expand faster than the other 2 global peers, with CSL now owning over 30% of plasma collection centres globally. On the economic news front, the RBA, of course, released those meeting minutes today, really driving in the fact that the RBA is paving the way for more rate cuts, really to support growth and job creation. The RBA says it's prepared to slash rates again to reach full employment and achieve its inflationary target, and honing it on those. Full employment means getting the unemployment rate down to 4.5% and getting the RBA's inflationary target up to 2.5%. In fact, we're well off that inflationary target now. We've got inflation of about 1.6%. So there were no surprises in terms of that data